Good morning, traders. It is Friday, November 15th. Taking a look at the charts, we've got the SP 500 daily chart, and you can see here more or less the market's having a little pop today. It seems like there's some talks about Trump and China getting closer to some type of deal, and we're seeing a little bit of a pop there. Obviously, money moving into equities means money is moving out of somewhere else, which is the safe havens today. Not a big shuffle really. Stocks are up about a third of a percent. If we look at bonds, they're down. They're relatively flat actually. If we look at metals, gold's down 4/10 of a percent, a little bit, giving back some of yesterday's gains. Silver down 8/10 of a percent. And if we look at utilities, which they're not open yet, but yesterday utilities had a pretty strong pop into the first short-term resistance, this little sideways cluster here, and then ended up selling back down. Overall, likely going to see money rotate out of the safe havens today and continue to hold up in the stocks. Now, if we go back and look at the stock market here, the SP 500, based on our cycle analysis, especially this pink line here, it's kind of our intermediate cycle. More or less, the market has topped out. And where we are here is all the cycles are clustering in the top zone. When we get into the pink cycle topping out, it can stay up here for a long period of time because the markets like to trend, and they're more likely to continue to trend than they are to reverse. And where we're at now is a point where we need to start to see where the market starts to show some weakness and then starts to break down and momentum reverses, and that's when we get a large drop in the market. We see our cycle come out, and then eventually we come to a bottom. And typically bottoms are a little more standout. They have some pretty clear capitulation selling, or they hit key support, and that's where we are. We're looking for a breakdown in the market, just like we've seen the other times. You never know when they're going to take place, but overall the market is primed and ready for a strong correction. We just don't want to jump the gun and get short. We want to start to see some weakness and for the momentum to stall out, and hopefully we can get short before it has another drop, potentially down to some type of support level here in the market. Now, if we take a look, let's pull up some of the leading sectors here, like the Russell 2000. Russell 2000, we'll just zoom in a little bit. More or less, we keep having these kind of topping candles where price rallies up and then it sells back down. We saw a gap higher, push up in the morning, sell back down. 3 days ago, it did the same thing, push back up into that zone and got sold back down. And yesterday, we saw the price move up and then sell back down. So there's still some pretty good selling pressure going on. We're at pretty critical resistance here where the market has hit these levels many times before, and we've seen very strong sell-offs. The big question here is, are we going to get that next leg to the upside? At this point, we've had a run. This looks like a tight bull flag. This has the potential to break out and run in a big way to the upside, but we'll see if it can get some traction. If not, then we're going to see this probably fizzle out just as quickly as it rallied up. Very similar to what we've seen in the past, where you get a quick move up and then it doesn't find traction with this tight bull flag. It just gives way and collapses again. And that's the way small caps have been kind of oscillating recently. Now, if we look at the transportation index, which also leads the market, we got these topping candles, and again, it's pulled back. We were talking about this a couple of days ago, and these two sectors or indexes here have moved down the most in terms of the broad market, and they are leading the way lower. Overall, a little oversold there yesterday. It gapped lower down to the 20-day moving average, had a nice little pop. We'll see if it can get some traction, but overall, I feel as though it's trying to put in some type of top here. This formation of volatility where we start to see it have a big pop to the upside, a sell-off, another big pop, a sharp pullback. This type of price action where you get these strong rallies and corrections are usually the late signs or early signs of a market top. Same as over here, you see a pop, pull back, and then you get into more violent price action where it goes straight up, straight down, back up, and then it starts to lose its ground, and that's when it gives way and starts to a downtrend. So we feel like we're getting close to that, where the market could still hold up for a while, but it should lose its momentum. We could eventually see it crack and move to the downside. Taking a look over at energy sector, natural gas up 1%, really just popped in the last few minutes here. Again, it's trying to find some support. This green line here is a long-term support going back on the charts. It got oversold. We're having a bounce. We'll see if it can get some traction. Overall, we played the nice clean setup in here. We've played both of these natural gas plays where we've got these nice moves here to the upside. We caught this one all the way up, almost right at the top is where we hit our second target. First target was right over here. Overall, maybe it'll form some type of basing formation where we can try and get long on a breakout and another move to the upside. But if it can't find some traction here, we could very quickly see this unwind and come back down to around the 240, 235 area. Usually this little bear flag here can be at the halfway mark. Whatever this distance is going to be the same distance to the downside. And that also brings us into these previous highs right over here and the breakout zone, which would act as a support level for the market to try to potentially start another rally to make a higher low and a higher high going forward. Looking over at crude, up 0.25% this morning. Again, it's struggling. Crude's had this really ugly chart. Not a fan of it for several months here. Don't like the way it's been chopping around. The big picture, obviously, if we scroll way back here, the big picture is more or less to the downside. If we look at the big sell-off, and we had a big rally here. It started off really strong in the year, but it's fizzled back out, and it looks as though it is on the verge of another drop. I do feel as though short term we could have a little pop and squeeze up into this 59.60 area. I think we could see a quick squeeze in there. I think it could be followed by a very strong reversal, and we got potential for it to come all the way down to test these lows that we saw in December, which would be a pretty strong move. If we were to just look at a Fibonacci extension, we can get an idea actually of where that downside target is. We could go from this high down to this low and to this recent high, and that gives us a downside target of 45, which is the December lows back in 2018. If we do get a pop up to say the 60 level, that would give us a downside move of around 47.50, meaning we go down. We've rallied back up to the 60 area if we do get that pop and squeeze, and then you get that next move to the downside, which brings us right over into this mid-range down over here. But at this point, if the market was to break down, 45 is the next level. If it stalls out here and starts to go down, this 45 is going to be the lower target area. Now, here is the XLE, the energy sector. This is the weekly chart. You can see we go all the way back to about 2003. Overall, if you look at this big picture pattern here, you can see where we are in this potential large movement where we've got this really critical line across here for the energy sector where it kind of rallied up and found support and ended up coming back up, and it's formed this other, you could argue this is a head and shoulders. It's pretty ugly, but the key here is that we've got a very strong support level through here. It's pierced through it a few times, recovered back, and if we see the energy sector start to break down, if we see crude really start to break down and hit that 45, 40 level, I think we could see the energy sector really have a big bout of selling, and we could probably see the XLE hit this downside move around $40 a share, which brings us back down to the 2008, 2009 lows. So this is a really big pattern in unwinding. If this starts to break, the energy sector could really have a big collapse. So there could be a play to use an inverse ETF, potentially going forward, ERY or something like that, to try and catch a breakdown in the energy sector. And a lot of it's going to hinge pretty much around crude having to break down for the energy sector to also start this break. But both the energy sector and crude have got this critical line in the sand that once they're broken, we could see a very sharp drop in price from there. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.